we have to prepare for the week. First thing, we go through the basket to select the top 3 instruments, the pairs, okay? The pairs will depend on different factors. We are not just gonna, this is a way I'm showing you, but you can be someone who wants to trade only one pair and only focus on one pair. That can work too. Sometimes we know the pairs that are correlated. Sometimes you can choose GBP USD, Euro USD, or if you know that you trade in Asia, maybe you should trade USD JPY or GBP JPY. And the choice of your pair will depend on, first of all, where you are, the time zone. Secondly, the news. So the news here, why the news? Because when I go to the calendar here and I go to filter, you see here, this is Forex Factory. Okay. If you go to Forex Factory, it will start here, and then you will go to calendar. And when you go to calendar here, you have the different dates that we have major news next week. So you have the whole week, Monday, Tuesday, Wednesday, Thursday, and Friday. And from here, you can just go and filter. You can choose which pair you want to focus on. I'm going to take dollar, JPY, JBP, Euro, CHF. I can remove it, AUD if I want, but let me take all of them. Okay, and apply filter. I will choose only the red folders because these are the ones that will impact the market. But so sometimes these will impact too. So I'm just showing you the whole thing. Okay, I will apply. Now you have red folders and these yellow folders, not yellow but orange folders. And you can see here in the third column here, you will see that you have different names of pairs of currencies. Okay, you have JPY here. We will have something this night. Okay, and Juve, hello, Juve, can you hear me? Yeah, okay. Juve is taking care of the waiting room. It's good. So here you have the currencies, and these currencies will show you which one you should focus on Sunday. I mean today, like in few hours, we will have the lower house elections in that will affect the Japanese yen. Okay. You also have the GBP. Bailey, we have a speak. It will speak. This is the Bank of England governor. Okay, so this could move GBP. If it's GBP JPY, I already know we will have a big move on this pair today. Okay, but do we have another GBP? Only on Thursday. And what is it? Okay, so what I'm saying here is I'm not trying to explain to you every news or every thing or event that we'll have here in this week. I'm trying to show you just the importance of focusing on the pairs that will have movement and which day you should avoid trading certain pairs. For example, you see that we have USD, USD, USD. Imagine I'm just trading Forex majors. Forex majors are Euro. You all know the Forex majors. I hope so. You have Euro USD. Okay. You have GBP USD. Then you have USD JPY. These are the Forex majors. Let's continue. Then you have USD CAD. Then you have USD CHF. CHF. You have 5 here. You still have 2. AUD. This is from Australian dollar. Aussie USD. And then NZD. New Zealand dollar and USD. These 7 pairs are enough for you to choose which one you will take for the week. Okay, you don't need to choose outside of this, mostly because you are trading inside of a time zone that will be affected by dollar. So by the USA time zone. So you don't need to focus on some other pairs. And also, these majors have a good spread that can help you trade better. When you take your trade, you can enter and your spread will not hit your stop loss at market close. Okay? So it's sometimes better to focus on the majors. Okay? And now, sorry, I'm trying to clean this because it's a mess. Now I'm going to go here and show you on the side here, I have instrument. So I have Euro USD, GBP USD, USD CAD, USD JPY. I also have EA, I will put it down here. I have AUD USD, NZD USD. Okay. We don't see USD CHF, but it's not a problem. I don't usually trade it, but it's okay. And then Euro, AUD, NZD, all these, I will just remove them. Okay. I will keep Euro and GBP because sometimes they will help me understand the correlation between Euro and GBP and then understand what is going between these two, Euro USD and GBP USD. So if I'm doing Euro USD and GBP USD for the week, I will have to watch Euro and GBP. Sometime when Euro GBP is going up, I know Euro is stronger. For buys, it's good. But if I see Euro GBP is going down, it means GBP is a stronger. Then for buys, I will take GBP and vice versa. So it means if I want to sell here when we are dropping, it's better to sell on Euro. And here, if we are selling, it's better to sell on GU. Why? Because Euro GBP will show you the strength between these two. And from correlation, you will understand that you can choose which one to trade here. Okay, that's why I keep the Euro GBP here in my selection. So this was just to explain to you guys how I see the majors and how I use them. But now let's go back to this Forex Factory thing here. You have the pairs and you know what you should expect. But you only have like 4 major news. Okay, I'm going to show you here. Sometimes you have to also do your own research. Let me show you the 4 major news that affects the Forex market. I have to type this because I have it in French, and to explain it in English, I need to show you the right text. That's why I'm searching it just on the side. So you have NFP. So I did not find it yet, but yeah, I probably think I will just write it by myself. I have the NFP here. I have the NFP. I have the CPI. I have the GDP. And I think PPI. I don't know how it's spelled in English, but these are the major news that you should be careful to trade. You do not need to be in a trade while they're happening. Why? Because they can take you out quickly and then move in the other direction. Okay, so what I want to say here is you will go on a Forex Factory. You'll be careful about what do we have. We have on Wednesday, we have this is a big news. Okay, we also had GDP on GBP on Thursday. Okay, we have CPI on CHF. Okay, and also CPI on USD on Friday. So we already know there will be movement between GBP and USD. I don't see Euro. Euro will just be used for correlation. Secondly, I see USD CHF on Friday could have something. So maybe in all the week on USD CHF, you will not see any move. Price will just be ranging, waiting for this news to come out and then to explode. But we also see that we have the average hourly earnings on USD that could have big impact on Wednesday. But when you are used to look at the calendar, you will start to notice the news that will have impact on the charts. So I'm going to remove this and apply again. and then I will keep only this. Okay, so I know USD I can trade on Wednesday, but I will have to avoid trading before the news. I will have to wait after 5:30 after this, then I can maybe find a way to enter. Okay, next time I will show you how to interpret these numbers, but we have good information about this from other educators on the platform that are really specialized on the fundamental analysis. Me, I'm more of a chart analysis, but I have some basis on fundamentals and I know how to use them. But in English, to explain exactly what I mean is not easy. That's why I focus on the chart. Okay, I hope everyone understand that. But here you can see that on Friday we also have USD. So you have USD GBP we can target. We also have USD CHF that we can target, and yeah, that's most of it. Then I will go now on the AUD. So I'll put USD GBP USD on the top here. Let me take USD CHF. USD CHF, where is it? No, it's this one. I will take this one. Okay. I have USD CHF now. I'll put it right below. These are my first choice. USD CAD, USD JPY, also the third one. And the others will just help me understand the market. So now I've chosen the first pairs that I will see have a movement in this week. I know the others will also have, but the thing is, these one are on the news calendar. Okay. I hope this is starting to give you clarity, Caleb. You ask about how to choose the pairs. Now you have this GBP USD. Let's start from there. We go now. When I was doing my text, it was on which one? Which one was I using when I put the steps? It was USD JPY. No. I think it was Euro AUD. Okay, I just don't remember then. Let me find if it was not gold. Maybe I think it was gold. Yeah, it was gold. So we keep this for the steps. So we go through the basket now to select the top 3. Okay, we already have an idea, but let's go now see if it speaks to us if we look on the weekly chart. Now, let's go on the weekly chart first. Remember, I've been teaching this like since the day one. The candle behavior will always tell you what the next candle will do. And I've been showing you this. Since these are weekly candles. Since we took out these highs and came and closed inside and then returned, and then the next week we closed bearish. Look at what price is doing. Price is always targeting the lowest point here. It opened, start going up, and then it targeted the lowest point, created another lower point. The week ended. Then it's opened with a gap up, targeting the next point here, going down. So you have the first factor that will give you direction is the draw on liquidity if price close in a breakout or a fake out. And then the second thing, so here you have, sorry, my mic was off. So here, what I was saying is it will target the lowest point if it's close in the same direction. We close in a breakout, then we expect to have a bearish move, not a bearish candle, but a bearish move. So price will open, go up, and then target this again. But one thing is important, we have to look what is happening here, because we are inside of a dealing range. We have a high and a low after a breakout. Market structure, simple, right? We have the low, we did not break any high. Then we started here and broke the high. So at least here, I know price could come here to grab liquidity. Why? Because liquidity is the reason price will move, okay? Liquidity is the reason why price will move. Price moves from liquidity to liquidity, okay? And let me try get this. When you know that price will move from liquidity to liquidity, you will always have a direction, because you're asking yourself who is in the money. The markets and the big fishes, they are in the market to make profit, and they cannot enter anytime. So sometimes they have to induce people to buy or induce people to sell, and then they can take their real direction after these people have been in the market. So they have put liquidity in the market. It helped them buy and sell, and that is what um, people will put in priority when they analyze the market. So you have to focus on where is the market going according to liquidity, and how do you find liquidity. Okay, let me show you now. Where do you find liquidity? Let me show you. The first thing you have to understand is you have different type of traders. Okay, real quick, I need to show you this real quick. You have higher, higher high, lower high, higher high, lower high, higher high, lower high, higher high, lower high. From a trend like this, how many traders are making money? Let me show you. You have people who will enter here after the breakout. Okay, and from there they'll put the stop loss here and the target somewhere around here. Now you have this as a high, you put the stop loss here, and then you target 2R. Give me a minute, please. Okay, sorry. So now you have the okay, so here you have sorry guys, I was fixing my mic. So here you have the breakout traders. First of all, let's observe what they do. The breakout traders are waiting for this. They're waiting for price to break here. When we have a breakout, okay, once you have a breakout, they will enter at the breakout. So when the breakout happens, they enter, they put a stop loss here, and they target something like here. Okay, they are in the money right now. Okay, second type of traders. Okay, this is the first type. Second type, they wait for price to break, and then they wait for price to come back, and then they enter on the retest, the break and retest traders. So we take this, let me write here breakout traders, breakout, and from these guys, we have break and retest. Where is it? Break and retest. Okay. Break and retest. How did I write it? Let's just put a small n like this. The break and retest traders. Okay. Break and retest, that we wait for price to move up, and then when price comes back at the level of the retest here, they will take almost the same entry, okay, because it's retesting this level. So they will wait for price to go up. They are like the same as these guys, but they will be more conservative. Sometimes their stop loss will be smaller. That's why they are waiting. So they have a confirmation that price is going up, and they will target a level here. It's rare to have a break and retest trader put a stop loss here, because it could have just taken the trade at the breakout in the first place. So it will have like something like this, okay? So we have the first trader here, we have the second trader here. Who else is in the market? You have the guys who are waiting for the price to touch like this. When they have a trend line, they will wait for the third touch. When they have the third touch, they know, okay, price is now moving up. Why? Because they will have a moving average doing something like this. And then from there, they will take their buys. So when they see this, they will take a buy here, protect most of the time below the last swing low, somewhere here. And then from that move, they will protect their capital here and target up there. Okay. And once you have this price touch it, they say, okay, our trend line is working. These guys are in money. These guys are in money. But the problem is, most of the time when price will come back like this, it will hit something like here with a wick, take these guys out. But if they're lucky, it will just give them a heart attack because price is pulling back toward the entry and they will all get out. If there are still people in the market, price will just ignore them and continue. But at some point, after you have the breakout trader, the break and retest traders, the trend line, let me write the trend line traders, okay? Once you have the trend line traders in the market, now the last one that are the more careful is the smart money traders, the one that enter after a breakout structure, and then they have an imbalance here. They just enter from the imbalance, okay, and or the supply and demand, and then they put the stop loss here, and then they target somewhere here. All these people are right because their trade it's working. The only problem is institutions just don't get in and get out. There are institutions and banks and other big fish that enter with the same rules that we see here, but they have to wait for their money to play out for like 1 week or maybe minimum 1 day and 1 month. And sometimes it's easy to take them out because when price will have all this, price will go and hit a major level here. And after hitting that major level, price will play a reversal. And from there, it can come and take everybody out. All their stop losses will be hit. This one will already be in breakout, like here. This one too. No one will get out with money. These guys maybe stop loss, and this guy stop loss and 2 break even. No one got money, but this liquidity is forcing them to sell out their own position so this guy can buy. Who is these guys? The big fish. It's like they make you sell so they can buy. That's why they induce you in the direction that will be the right direction. They take you out if you enter earlier, and then they come get your stop losses, and then they will put the right position. It's just how the market works. Okay, so I'm not gonna go too much into it. I have more explanation on the liquidity on YouTube. It's one of the most viewed video. But the thing is, you should think about that because you know you have a range. You have a low here, and you also have a high here. So where are the stop losses of everyone who entered here? You know it's maybe here or down here, okay? But depending on the pressure, if price is moving up like this, so it means what? The trendline traders could be here. Maybe we are reaching a level to turn around, okay? What are the smart money traders doing? The smart money traders are waiting for here, okay? All of us, no exception, are liquidity. We are all liquidity, but the one will be taken out first will be the one that entered too early. So you have to know when to enter and to play out. Whatever trade you take, if you just let it play out, it will be at some point stopped out by the price, especially if you trade Forex, okay? So when you have this, you have to observe where you find yourself according to the other traders, okay? The breakout traders are in drawdown right now because their money is below their entry point. The break and retest are waiting for price to enter, or some of them entered at the retest. So their stop losses must be here. This is the most important and interesting level to reach here. And if you understand that, you will know that this is where we should target for the next week. So this is my range, and price is pulling back inside. Am I expecting to see price to move up? I don't know. I will see how price will behave, but this is the weekly candle. So I told you the second step was to look deeper on the daily to find the internal range liquidity and external range liquidity. Okay. So here it was an example to show you how you can look for to understand where you are, because on the weekly time frame, we choose the basket. We are using two tactics. The first one, we're gonna look on the candle close on the weekly time frame, and then where we are according to liquidity. Okay, let's start now with our basket. I will go on GBP USD quickly. We have the weekly time frame. How did we close according to the previous week? I'm going to remove everything here. You can see what we had. We had a sweep of liquidity here on the weekly time frame, and then we closed bearish. So what do I mean by close bearish? I mean we closed below this candle here. And after closing below this candle, it means we could continue lower, because this could be our draw on liquidity now. Because we closed here, we expect to see price come up and then drop lower. Remember, when a candle must be bearish, it forms like a high and then a low to close lower like this. So if this is what we're going to see here, it means we are going to start the week with a bullish move, and then we can drop lower. Okay. So on GBP USD, I'm already bearish according to what I see here. What I see is a rejection and a close bearish below this candle. This is a rejection candle, and this is a bearish candle showing intent to go lower. Where are we on the higher time frame? Okay, we are in the middle of like a range. I think it's probable that we continue until we reach this level here. Okay, so now I'm going to mark the relevant highs and relevant low. This is the relevant high. I have a relevant low here. That's also marked the break. We had a break of structure here. All the big institutions that took entries on this breakout now are like price has been okay, and retest. The retest happened already. We had the retest here. All the breakouts and retest trade took their entries here, and now price is coming back below to get their stop losses. This is what I expect to see on the next week. If I go deeper, what did I say? Look deeper on the daily to find IRL and ERL. I is internal range liquidity. E it's external range liquidity, and we can see what phase. Oh, okay. So this was wrongly typed. What phase are we in? Okay, this is a question. So we can come here and ask ourselves, how do you know the phases? Phases are simple, guys. You only have expansion, retracement, reversal, and consolidation. Okay, after an expansion, you can have either a retracement or a consolidation. If you have a reversal, it means price expanded in one direction and then change direction. This is a reversal. If you have an expansion, it means you broke structure first. You always break structure. When you broke structure and continue with intention, this is an expansion. How do you know if it's a retracement? If price is moving slower inside. And at the level in the 50% of this range, you have an equilibrium. The equilibrium is the middle point of the range. Below the equilibrium, you have the discount area, and above you have the premium area. Premium means prices are higher and prices are lower in the discount zone. Okay. And how do you know it's a consolidation? The consolidation is after an expansion, price will just move sideways. Now, after consolidation, okay, there's nothing else that you will have apart from expansion. So after consolidation, you expect an expansion. After a retracement, you can have a consolidation or an expansion. Okay, but reversal will come only after an expansion. Okay, so you know how they can work. If I have an expansion, I should expect two things: either a retracement or a reversal, a reversal. Yeah, but what comes before the expansion? It's a consolidation. So whenever I see a consolidation, I'm happy. Why? Because before I see the expansion, I will just wait for an inducement, which is called also a manipulation. The inducement that I just showed you, how price will induce people. Okay, look at this. You have this consolidation. This was a drop, right? But is an inducement. Why? Everybody sold, put their stop loss here. What did price do next? Price came back up here. So after an expansion that you had here, price created this reversal. Okay, so you should know that price will always show you the phases. You should expect expansion after consolidation, and after expansion you must be careful to trade, because after an expansion most of the time price will slow down and it will not show its hands. It will stay in a consolidation. But when you see a manipulation inside the range after a consolidation or a retracement, then you can take the expansion again in the same direction of the trend. So now I'm going to take all this out. I'm
Hey, Emil.
quickly going back. Yeah. Yeah,
Sorry to
Tommy,
cut you.
Caleb.
Sorry to cut you off. I think I missed the drawing of the retracement. I don't know what that looks like.
Oh, okay. Let me show you again. You always have, when you have a break of structure with intent, you have like a big candle. This is an expansion. Okay. When you have a big candle like this breaking a structure, this is an expansion. Okay. After an expansion, you should expect two things. That's you can look at these charts. If I tell you 60% of this chart is retracement and consolidations, okay, and you will see only 40% will be the expansions. So whenever we look for expansions, we should look for these first, okay? And expansion or reversal, which is also an expansion, but that comes in the opposite direction of another expansion before it. So the reversal and an expansion, they have the same nature. They are aggressive moves, okay? The retracement, they have only one intent: to rebalance an expansion. When you have something like this, it's out of balance. To rebalance, it means coming to the equilibrium point, and that's when the retracement will happen, because it's coming lower to rebalance that move. And you will see that most of the time after a news, a big news will happen, and then you see price move slowly into the middle point, and here you will have a manipulation, like I told you, an inducement, touching all these people here. The break and retest traders, the breakout traders are now okay. Some you will have some sellers here that will be induced to start selling, and then price will come back and show his hand now and continue higher. But this was a retracement. Okay, retracement is like trending consolidation. What do I mean by that? Consolidation is like this, okay? But if you see it move like this or like this, it could be a retracement. Most of the time when it's happened after a trend, like a big move, an expansion in a trend, the retracement is also to see it's opposed to the direction of the trend. If the trend is moving up, everything that's come back inside, it's a retracement. Expansion, retracement, expansion, retracement, expansion. So the retracements are opposed to the main direction. The expansion will go in the direction of the trend, okay? So consolidation and retracement will always be followed by an expansion. But the reversal will only happen after an expansion. That's what you should expect. So before an expansion, you want to see a retracement or a consolidation. But after an expansion, you only have to expect to see a reversal, a retracement, or a consolidation. All these three will happen after this guy. The expansion is the big boss. Is the only one that can be followed by all of them. But these two here, retracement and consolidation, will be only followed by expansion. And reversal will always come after an expansion. Let me tell you. Let me give you an example before we move on. Let me give you an example before we move on. I'm going to show you every case that I just explained here. If I have an expansion first, okay, let's imagine expansion first. First formula, expansion plus consolidation. And then you have price move like this. What should price do after that? It will manipulate. After the manipulation, now you have a sign that the consolidation is finished, or the retracement. It was a manipulation higher, and then it came back. You see this? We can call this a reversal, but it's just an expansion lower. This was an expansion higher after consolidation. So we have expansion, consolidation. What did I tell you? What comes after consolidation? Only an expansion can come after consolidation. How do you know the consolidation is over? You have an inducement or a manipulation. Because when this breaks out, everybody is trying to buy now because they think price has broken out. But what price will do next, it's coming back down and take them all out. Okay, this is bull trap, like they call it, or a stop hunt, or a manipulation, or like I just told you, an inducement. It induces people to buy. Okay, so when you have this, let me show you another case. You have a consolidation, then a manipulation lower, manipulation higher. Now you don't know where to go, right? You observe where price is coming from and where is it going. You could have something like this. Price can happen to continue higher. And even if this is a small expansion, let me show you, it still applies the same rules. You have to wait for price after an expansion like this to give you either a consolidation like this or a retracement. So when you see a retracement inside a range, you are more focused on the equilibrium because you have the discount and the premium zones of the range, and price will respect the range most of the time. Okay, because the retracement role is to rebalance this move that was not fair. That's why it will come back into a fair value where buyers and sellers will find themselves satisfied. That's why the retracement role, it will be to bring price down inside this range, and from there they can now have a new deal. Either they will sell or buy. Okay, most of the time before they sell, you look like this, you have an expansion, retracement. Most of the time before they sell here, they will manipulate everyone out of this retracement. People will start buying and then they will sell. Okay, another phase, another case, because when you do the charts, you will see all these phases. It's just combinations. Imagine you had an expansion and then price retraced, start retracing like this, and you tell yourself, what will price do next? I'm caring about one thing, the balance, the high and the low of my session, of my structure. But price arrived here, start going up slowly. Is this an expansion? No, like I told you, it could be a trending consolidation. It's like a retracement inside. Something is happening. Maybe price just created a bigger consolidation. You see? But you don't know that. You have to see how price is behaving. So I have these highs here. Price comes slowly and then explode and then come back inside. Do you really think that's an expansion? No. On the lower time frame, this is a reversal. But the reversal is happening when? After this consolidation. So this could be just a manipulation to show We are ending this consolidation and we are trying to go back lower. And you are not going to call this reversal. Yeah, you can call it reversal according to this move, but you know it's an expansion lower. Why? Because it comes after a retracement and a manipulation. You can also have a consolidation, a sweep, price sweep up, and then continue a consolidation again, but you're not consider this as an expansion. If you consider it as an expansion, then this is the retracement. Okay, it's subjective to how you see it, but it depends more on the time frame. Okay, but if you have the rules in place, if you use the drawdown, like you use the daily first and then the H4 to look at the setup, and then you see the M30 or the H1 to see in details what you have on H4, and then enter on M15 or M5, you will always look at the market structure inside here, because here there has too much noise and here you don't have any details. That's why we are using the weekly to look at the candle, the daily to look at the zones, and then we will go on H4 and we will start seeing the structure. And from there, we will have our zone marked. Okay, these are the steps here. You can see we had weekly first to check the basket, and then we went deeper on the daily to find the internal range and external range liquidity and think about the phases. And then we're going to mark the zone and levels on H4, and then we can wait for price for entry at the day where the price will bring the chart to our levels. Okay, so let's go back now. That's, yeah, I know you all understood what I said here. We were on the weekly time frame and we said we expect to see GBP, just write it somewhere, GBP USD is going to drop. Just write it somewhere. This is how I choose my pair, and I have a bias for the week. I could be wrong, but I'm not going to take any sell without any confirmation, but I have to know where the price is going. After the reversal here, I said price would go low. I was right. And here also, I said it's going to target this level. I was right, even if the price came back and closed bullish. The draw on liquidity here, it's this low. So for us to be more efficient, we mark the previous high low and the previous weekly low and the previous weekly high, like here and here. These levels will be tested, okay, according to the direction. But here you have already had a sweep. This sweep on the weekly time frame is what is showing us that price will at least reach here. We have a drawn liquidity that could be this level. And when I look at the line chart, this is a key level on the weekly time frame. This one is also a key level on the weekly time frame. This one is also a key level on the weekly time frame. But you cannot see it if you don't mark it first. You have to mark the highest point of the previous week and then the week here. So we know price is trying to get these weeks here. I can mark here. I have some templates, previous weekly high and previous weekly low. Okay, this is a key level on the weekly. And I'm waiting for price to go here. Where did I react before that? It was here. So I have another level here. It's also a weekly level. When I go here, it's where I reacted from. You see, price reacted before once, and this is the second time. We could not break and close above. If we closed above, I would expect to have a bullish move, but we closed inside and then confirmed that bearish move with the previous week. So we go now on the daily, like I said. Where are we trading from? From the internal range to external range liquidity. Now, the timing is about to be set. How? We are inside of an imbalance. It's an internal range liquidity. It's a NEOL, IRL here. And this should push price up to go back here. You see, if you only trade this, you could be wrong. Why? We already saw the weekly has reversed. But on a daily, some people will say, okay, I'm in a bullish trend. Are you? Are you really are really bullish? We just hit a key level and we swept liquidity here and came back inside the range. Maybe, okay, maybe we can just continue higher. Why? Because we swept here, but I don't think for the whole week. Remember, I told you what? If the week wanna start and close bearish, it will always start bullish and come bearish next. So I'm starting to have a clear picture. If I'm expecting to see the bullish move tomorrow on Monday, it's confirmed by the Friday move. Friday swept lower, pushed up inside, stopped there. What is Monday going to do? I don't know. Don't expect to think that you could know what the price would do. You don't need to tell yourself that you know what the price would do. But what are the possibilities? That's what we can discuss. The possibilities are clear. We have a breakout structure here. What do I call it, breakout structure? If you go on M15, you will see, okay? You see how it's a breakout structure. Let's go back on the daily. I marked it here. This is a breakout structure. Showing what? Showing that people took a sell here. Closing below and targeting maybe here. The price is coming back. Now, are they in positive? Yes, a little bit, but price will target their stop loss. Where the stop loss is, it's around this weekly key level, previous weekly high. So we still have a move here. You know now the scenarios. We have a move to go to. This is the first move. We could target this, but we know where to stop. And then we target this next move. Will price stop here? I don't know. Why? Because after reaching this imbalance, which is also an internal, but I will mark it imbalance daily, inside of this imbalance here, price could come and react to it and then drop lower again. We also have a key level. If you see this, the key level here, let me take this one. This key level could reject price. Okay, this is a daily, it's a daily support, resistance. Sorry, what did I say? It's a daily resistance. You have a daily resistance. Price could come here and stop here and drop. Do I have another daily? I have another one above here. Okay, this is how I'm expecting to see price. If price comes up, these three levels could be where I will see price reject from. Okay, I want you to keep this written somewhere. GBP USD will move up first and then drop. If it doesn't, this was the first possibility. If it doesn't, what will bring price down? Okay, you will have another reality here. You have this. We already know we are inside of this internal range. So now this is in imbalance. Maybe price could just push from here. How? It could come, open here, create a small wick, and then drop. You see, this is the possibility of seeing price drop first and go for previous weekly. The previous weekly low and the previous weekly high are the two checkpoints. Which one will I touch first? I don't know. I will have to observe how Monday will play out. If Monday comes and look for this guy first, what does that mean? It means all this price action was just a liquidity sweep, an inducement to sell, and then price will go back up. And that will match with the trend and everything else. But if it's not that, price will go back here, like I told you, and start the new trend. Because why? We reached inside of this guy and we are touching and now a bearish move. You see how flexible I am, because I don't want to be obsessed about a direction. I want to see how the market will react first, and then from that only after that's movement that I will have on Monday and Tuesday, I will know if I'm going to buy or sell. Okay. And from here, normally what I do, this is a sweep. Let's mark this here. From here, I will see price continue up because I know a sweep. This is candle 1, candle 2. I'm expecting to have a candle 3 bullish. Most of the people that trade like me will take a buy tomorrow on GBP USD. Also, remember what we had on Forex Factory. Okay, so price could go up, test these levels here, and then drop lower. Okay, this level is the strongest one because is where you have more players that came in. If you go on the fixed volume price and then you look at how price played out, there's more consolidation, so there's more entries here. Before price break this level, it should be very, very hard. So from here, I can drop on H8 or H4, but to quickly look at the market structure, it's Sunday. I don't want to go too much in details because I want to wait to see price play out on Monday. So if this imbalance will not reject price, where should price go and stop? I have a level here. I have this as demand zone. It's a supply zone, sorry. We have a supply zone here. And below here, we have a demand zone. This is demand zone. It's on H4. So you have to observe price and wait. And that's what I told you here on the next step. Okay, mark zone and levels, and you put your alerts. So you have this, you see the levels are passing inside of here. Price is mostly going to go, I think, inside of this supply zone. And we will wait to see if price will reject. We also have the imbalance that could push price lower. This imbalance is very weak. Why? Because if this is my range after the break of structure, what should I expect to see? Premium and discount. The zone to sell that are more in the premium zone are best price to sell from. Okay. So price could reach up here. Now, if I consider this and I see that price will have a target, this could be my target. And if price comes here first, then we know where price will be targeting next. Okay, so we have two zones and we wait and see what price will do. We put an alert here and we put an alert here. Okay, clean. This is, I prepared GBP USD and I will wait and observe. This is internal range liquidity. This one is external range liquidity. And we see how price is playing out. We will wait and see, okay? Knowing how to enter, like the fifth one, you wait for price level, and before choosing entry model, you have different entry models. I told you which one. The first one, the easiest one, you have an H4 that's formed, okay? Imagine this was an H4 price action. You have an H4 engulfment here. When price will come back inside of that H4, first thing you observe is, do we have a break of structure? And from that break of structure out of the H4, you will go mark an M30 and you call it your setup. Okay, this is your setup. Okay, sell setup. This sell setup will be on M30 or M15, depends on how the price is playing out for you. And the only thing you're waiting now is to see the price comes inside here and create an M5 engulfment. Engulfment that broke structure. And you have conditions because I told you which one can work and which one will not work. You have to see a sweep of liquidity when it touches this M30 and create a break of structure on M5. And from that, you will come back inside here. You will have another engulfment on M5. That will be your entry point. This is entry sell, M5. For this case, it's a supply zone. And price will come here. This is the move you will catch from to sell, okay? And when you have this is an entry model that I gave you. We already have the H4, so we know what we are waiting for here. Price will play out. It will give you like 2 entries per pair per week. And that could be enough for you to make your account profitable. This is the entry model. H4 first, wait for price to come and break out of the H4. And after breaking out, you mark an M30. And then you wait for price to come back in the M30. And when it reaches it, you see if there's a sweep of liquidity to confirm that there's no liquidity above it. And from there, you will wait for the break of structure and wait for price to retrace inside of the M5 zone that is here, and you will take your entry. You take a sell here, protect above the setup, and target the last swing that you had on M30 or H4. Okay, somewhere like this. And you can target this and you have a trade. Okay, this is an entry model that I give you. So after you do the preparation for the week, you just wait for these levels to play out, and you keep your journal filled every time that you have something to write down. You write the entry, what time you entered, how were you feeling, what was the pair, how many lots did you enter. You already know how to journal your trade, so this will help you understand what is working and what is not working for you. But that entry model that I gave you is very, very good. Okay, everywhere you see a move like this, it already happened in that sense. Let me show you here. If I come here and mark my this big H4 move, another one here. I'm trying to find something quick so you can see. If I have this H4, you see H4 here. Let's go back on M30 now and see what price did when it came inside. Do you see here? When we came here and broke out, what did price do? The last engulfment before we break out. Where's the breakout? It's here. Where is the last one? It's here. You see the last M30 before breakout. Someone else will consider this, but I think this will just come to play out later in time. You see, price will come here. Look for the same levels that you already marked before. You see, so after this M30, price came out and then broke structure. So we want to see a sweep, like I told you, and then a break of structure. And then from here, I will mark the M5 that created all this, and we have it here. Let me go check on the M5 if I can. I'm trying to show you the entry model that happened to give us a trade like a few past weeks. You can see it here. After we broke structure, you see all this is bullish, but only this is a bearish candle. I want to hope and see if price will touch this level to the pip. You see, price came here, touched it here at what time? New York open. Okay, this is 10:30 and this is 8:30. So you had like 1 hour of possibility to enter. This is option 1. That's how I give it. This is option 1. Option 1 is always coming from the first breakout after the sweep, and from here you have an entry first. But if you missed it, entry 2 is after this. You should look for a breakout. Which one broke structure? You had this. Where's the last drop? The last drop is here before we break structure. Okay, you also have this that got manipulated, but it's not a problem. Why? Because your stop loss will be below all this, and the entry time is not doesn't follow any rule. So you see here that price came twice to the option one. After testing the option one twice, it broke structure. After breaking structure, you have two types. You have the breaker, it means the last candle that created the sweeping candle. This was the sweeping candle here. This guy here will give another entry later on, you see? So it's complex, but if you try on a chart, you will start to understand by yourself. This guy here, I wouldn't put it because it's a liquidity. Remember, we have criterias. Does it have liquidity above or below? We have liquidity below this one. This option here was not valid. So I will wait for price to take that liquidity, break structure in the same direction, and wait for price to come back inside, okay? And that's why it came back from this here, because after sweeping this, we had a breaker, and from this breaker, price moved and gave us an entry. So you had option one, option two was a breaker. You could also wait for here for the manipulation to happen around 9 a.m. and then news to happen, like I told you. You enter after here, you take a trade, look at what price did after that. You see, all this is just a move coming from an H4. Then you have an M30 that was marked before breaking the structure. And next day, price came in and gave you a trade. This can happen like twice a week, but it will give you very precise entry, guys. You should train yourself and exercise on this strategy. I'm telling you, this strategy is gold. It's gold. Everywhere you see a big switch, okay? Everywhere you see a big switch, this one is my alert. Let me put it there. Everywhere you see a big switch, like here, everywhere you see a big switch like here, you already know price did the same thing. If you go on H4, looking for the point, the reaction zone could be imbalance or engulfment, but I taught you only to use this. Okay, he missed it from 1 pip. But what you see here is the last candle is what you're expecting to see a move from on H4. Even here, after that sweep, you had another engulfment on H4. And this H4, okay, it's an ECR sell. You can call it engulfing candle sell. And you go inside of your ECR and find your setup on M30. When did price come out and then came back and then created an M30? You remember the criterias? Do we have liquidity above it? Yes, this one we have. Why? Because we have an imbalance that could be retested later, and price came back to retest it. So if you took the M30 from this level, you would be maybe stopped out. Why? Because you did not take the criterias in consideration. You have to wait and find the one that sweep liquidity. Okay, we have a sweep here. We have a sweep. Always have a sweep before you can confirm your ECR. We have this one. It's an H4. Price came out, came again, did not sweep here, then swept here, closed bearish. Where is the M30 before we close bearish? You see, we came from here. We came from here before we break here. So this is my M30. I will focus on this one. I will go now, wait for price to reach here. Okay, it will be at a key level. You go now on M5. After M5, what do you have on M5? You will see inside your M30 here, you have first option here, refinement of M30. Second option is breaking out of this level here. Like I told you, you have the push, okay, swept here, took out this imbalance, which is internal range liquidity. After breaking that, we consider this as a sweep, or here we closed above and then came back down. Where is the beginning of the bullish move? The bullish move started here. You can even see it on the line chart. You see, it started here. After this move, now we expect price to come and retest this zone. Okay, what did price do? Price came right here. Here, you see. What time is it? 6 a.m. Price came back here. And at 8:30, it came back again. And at this is 10, it came back again. You see how price will give you many entries. You have option 2 here. If you came late, the price has confirmed all this. You already know we are going bearish. When price come and retrace here, it's just another opportunity to come back and enter again. One here at 10 p.m., 10:30, and another one at 11:30. You see? And most of the entries will respect the same levels. So you start with the H4, then you look at the M30. After the M30, you're now focusing on liquidity. How is liquidity forming and what is swept and what is not swept? After you have that, also watch the Asia session, wait for it to finish because I don't enter on Asia session. I will enter on London and New York session. Okay. That also can be a clue to tell you that it's not time to enter. Okay. So I hope you really understood what I gave you here, guys. I gave you the full process on GBP USD, and I told you that this week we are going to be bearish. I gave you the direction. I gave you the almost the approach that I have when I come and look at the market, and I have the levels marked. We have to wait for this to happen. We already have the sweep here, the previous daily sweep. If I go on H4, I will see it here. Okay, so price is as closed inside. We are expecting to see it continue higher. And from this price action, we have fall one here, one down here. But I also have the imbalance, okay, right below this guy, which is also supply zone. It could give a small sell before going up. Depends if you want to scalp it, but I suggest you wait for the bigger zones. And if I see anything different, I will tell you guys what price will do. News can come and change everything that we see here. That's how it happens. So yeah, I think that we can close the call now because it's been like 1 hour and 20 minutes. But the thing is, you can do the same thing on every pair here. I've shown you the steps. I can do it, but you already know it's the same thing. Okay. On the weekly time frame on USD CHF, you saw how price rejected bearish and then came and closed bullish. We have this bullish intention that should be interesting for us. If I go on the monthly and see here, I can only go higher if I want more clarity about the direction. Look at the monthly. This is January. We closed bearish. Okay. After this rejection we have here on the wow, we have this big rejection. So maybe we reached a level where price will go back up on a monthly time frame. Monthly time frame, even if we are bearish, what do we need to see? Price will probably return to go touch this level, this key level. So on the weekly, we are bullish until we reach this level. On the daily, we are bullish until we reach this level. And what do we have on the daily? We have a supply zone here. So I will wait for price to reach this level on USD CHF before I can start selling. And if I go on H4, what do I have? I have strong low, a break, creation of liquidity here. I have creation of internal range liquidity here. And price will just, I think, take out this liquidity. So I'm waiting for Monday to open, and I will target to go up there. This is where I should go before I start selling. And is dollar and CHF opposed to GBP USD? We know GBP will go lower, okay? But let's observe the two, because these two are most of the time opposed. And when price will go up here on GBP USD, it will drop. So on USD CHF, we have a zone. Let me observe on the daily if I have something lower. Yeah, I have something down here. This is where I should expect price to come back if we have dropping lower, but I don't think price will come lower. Okay, we have key level here on the daily time frame. This monthly key level will match with a weekly. If it does, yeah, we have a weekly here that is very strong because it's the open close here. A market opened, close, and open again. So this is the weekly that I will take in consideration. It's very close to the monthly level. On the daily time frame, I will take this one in consideration. I could also come closer and bring it up here to refine it. So you see everything is happening inside this box. I know price is coming here to retest one of these key levels. Okay, so USD CHF bullish, but we need to see where price will go, get the liquidity before we go up. And if it's the top here of this box, then we have an imbalance on the daily where price could come and get liquidity before we can continue higher. So I expect to see this drop here from Monday and Tuesday. And then from Monday and Tuesday, after that, we have a bullish move to go conquer these higher prices. This is on H4. Now we can see, you see how price is going down on USD CHF, and it can go up next. I have to expect this and wait. I will mark my 50% of the zone. This is the equilibrium. I'm waiting for price to come inside here. What would reject price? I have an H4. You already see it. I have an H4 here, which is a buy H4. When price will reach it, I will look at the M30 and I could catch a big move. I could really catch this big move going up there. So I will put an alert here and wait. And if price comes in and reach this level on Monday or Tuesday, I know the reversal can happen here, and then we can start going up from Wednesday and push up higher. Okay, so that's it, guys. I think this can help you for GBP USD and USD CHF. I will continue for the other pairs, but these are the most important that we have to focus on. So thank you again for being part of the call. I'm going to close the call now, 1 hour and 30. And I will really do my best to put all these calls on the YouTube channel so you can go and rewatch them there. So thank you again for being part of the call. Thank you, Juve. We talk later. Okay, take care of yourself.